What's up, y'all? Welcome back to the Mining Pod, brought to you by CleanSpark. We've got a news roundup with special guest Charlie Spears. So we're going to infuse a little bit of writer's room into this one. We've got some good news items lined up. A lot of kind of the same companies and a lot of AI HPC stuff. We're going to be doing the hash rate update per usual, talking about the potential that American Bitcoin might be trading as soon as September, according to reports from Reuters. Bitcoin bears $1 billion capital exodus last week as crypto ETPs bleed with data from CoinShares. We've got an update from IREN doubling its GPU fleet. And then we've got a pretty interesting cry corner that involves our friends over at Ocean Mining. But before we get into it, a word from our sponsors. You ever get into your buddy's car and think, dude, how do you live like this? There's half-eaten Taco Bell on the console, a pile of garbage and fast food cups and bags, rumbling in the trunk. You look behind you under your seat and you're pretty sure you saw something move, but you don't know what. Well, how do you think your Bitcoin miner feels if you're not keeping on top of your filtration game? Y'all need to get on Colorado Air Filters. Colorado Air Filters is a major supplier of air filtration systems for Bitcoin mining sites. And they're currently running a summer sale on their inventory, so now is the time to act. Whether you need HEPA filters, new shipments or installations for your containers, or your large-scale mining facilities, retrofitted buildings, Colorado Air Filters has it all. And units are ready to sell now. Contact sales at coloradoairfilter.com and use the code MININGPOD to claim 15% off today. Again, that is sales at coloradoairfilter.com with code MININGPOD.
Hey, Will here with Blockspace Media. Did you know that we have individual feeds for all our shows? If you're watching the Mining Pod, Bitcoin Season 2, or the Court Show, be sure to check out the individual feeds. You can find them on your podcast player of choice, whether that be Spotify, Apple, YouTube, etc. Just type in Blockspace Media and you'll find all our shows pop up, or just type in the individual show name like the Mining Pod or Bitcoin Season 2. Be sure to hit that subscribe and give us a 5-star rating so we can continue to bring you the best content in Bitcoin.
Mr. Difficulty Weatherman Matt Kimmel, do you want to tell us what's going on in the mempool?
The mempool is dry as can be, really. There's nothing to talk about on a fee front. But if you look more broadly at what's going on with difficulty, we had a very small difficulty increase last time around. We're now 44% of the way through this adjustment period, and we're looking for a pretty steep rise in difficulty at this point. We'll see what happens in the back half, but we're set to go up 4.98% is what our friends at Hashrate Index have it at. The Bitcoin price is down from all-time high a couple weeks ago when I think we touched 124. We're down about 10% to 112,000 a coin. That made hash price, that is the network-wide revenue measure, dollar per petahash second per day. We touched 60 on that all-time high day. We went all the way down. We've touched, I want to say, let's see, we've got it on the screen here if you're watching on YouTube. I think 53 is what we hit on the bottom. Now we're back up a little bit closer to 55. But again, we're set to have in about a week's time, difficulty increase of about 5%. So hopefully price ticks up. It's been the main driver these days of hash price for sure, with a very little to comment on the fee side. And then hash rate has really been kind of oscillating, still chasing that mythical, so dodgy 1 zeta hash. But I'll toss it over to you guys, see if you have any added insight color.
Yeah, we're just on the cusp of a zeta hash. It's going to happen here in the next few months. You can feel it. And my subjective observation is that it's cooler here in the central US than before. Finally, this week, a lot of the hash rate's concentrated in Texas, in Georgia, and it's cooled off. So if you had some minor curtailment during the day, I'd expect, at least due to weather, that curtailment to decline for the time being.
Yeah, I mean, you can see here on the 7-day average on hash rate index, it's just itching to break out of this like 975, 976 all-time high range. And it looks like it's kind of gunning for a breakout right now. As you said, Matt, we're going to get a pretty sizable difficulty adjustment here. If this holds, we've still got more than half of the period to go.
Okay, I have a quick discussion question. By which moving day average do we say we've officially hit a zettahash? Are we looking at the 7-day or the 30-day?
I would say 7-day, but the 30-day, it's just like if you want it on a longer time. I mean, that's like when it's been solidified, I think, once you get into the 30-day.
This is the type of semantic data discussion that I live for. I actually advocate for the 14-day moving average because it closely, theoretically tracks the difficulty adjustment period.
I think that's
anything under 7-day, I think, is unserious.
Yeah, I would agree with that. And I think the 14-day is probably the best metric to use, honestly, because like Matt said, it does track difficulty adjustments. So it's probably a little more accurate in terms of real-time hash rate.
Okay, so we need a full, to officially hang our hats on the zettahash, we need a full difficulty adjustment where the moving average of that difficulty adjustment indicates zettahash. So that's the official metric by which we will celebrate on this show.
And with that, let's go ahead and move on to our first story, which I think is probably the biggest thing to come out today, at least in terms of Bitcoin mining stock news. Gryphon and Hut surge after Reuters reports a report of American Bitcoin trading in September. This was on Blockspace.media. I'm going to go ahead and actually go to the Reuters report, though, because we've got some quotes in here that I want to reference. So the article basically says that it's possible that American Bitcoin could be trading on public markets via its merger with Gryphon Digital as soon as September. The unlisted firm's merger with Gryphon Digital Mining is set to be finalized shortly, and the goal is to start trading in early September, according to Asher Gnuth, the CEO of Hut 8. And that's not a guarantee. Could be later, but it's looking like they have most of what they need to go ahead and start or have their public debut. So I wanted to flag this just because Hut 8 also has been in the news for some other stuff, which I'm going to pull up right here. They have kind of broken ground on 1.5 gigawatts of expansion, and are taking out a $303 million credit facility. They've got data center projects across Louisiana, Texas, and Illinois. And so they've just had a pretty incredible week. Their stock has been surging. And now American Bitcoin is slated to go public. And, when this news first broke, I was kind of pondering what's the real benefit of splitting off all of these mining assets, taking, an 80% stake in this new company, but still used to own 100% of those assets, right? And now it's making a lot of sense. If you can get excitement behind two of these stocks and have the business lines clearly delineated, it seems to be paying off right now because Hut 8's kind of just chugging away on the infrastructure and data and energy inside of things. But curious if y'all have any thoughts on this.
To me, I think that what's kind of interesting here, the benefit, I guess, for American Bitcoin is that because it's a merger, they get to kind of sidestep the IPO process that goes on with the SEC, which can be a bit of a gauntlet. And then just like the names in this, it's like you have the Trump brothers, you have the Winklevoss twins. It's like, oh my gosh, is this just politics and crypto and like this kind of interesting equity play? It's like very 2025 of a story to come out. I mean, you think like these corporate treasury companies, like none of them have been IPOs, right? It's kind of an interesting dynamic. They're like resurrecting these old zombie companies.
Yeah, they're all like reverse mergers and things like that and SPACs.
Yeah, like this has the chance to, I think, be kind of like the meme asset that the Trump family maybe wanted the Solana token to be, like just in the equity space. Like it's a meme stock for the Trump family. I could see that happening. I'm not foretelling that into the future, but I'm just, it's in the back of my mind. There's a sliver.
I do think that, in terms of potentially being the most profitable venture. I mean, Bitcoin mining isn't necessarily, but that doesn't matter if the stock price is going up for something like American Bitcoin. Like I think this, at least as long as Bitcoin's running, has the potential to be the one crypto venture of theirs that actually performs pretty spectacularly. I would think. I'm not endorsing it. That's not financial advice. I'm not saying that they're necessarily even good operators, but it's just like kind of what Matt was saying. You have the Trump brothers involved in this. They have a lot of Bitcoin on their balance sheet, or they're building it. And there's mining's not the most hot thing right now, but there are fewer players in the game, right? You have CleanSpark doing pure play and like American Bitcoin at this point, basically. So,
and think about like we're in IPO season again. Like you've said, you've had a lot of hot IPOs, particularly crypto IPOs. The Circle one got a lot of people back engaged. You had the Figma one. You had a lot of successes. Peter Thiel's Bullish. Really hot IPO. So this is the first like real scaled mining IPO. So the Avengers of American politics are getting together to come put their names on this, including the Winklevoss twins. You know, it's funny. I look at like Asher Ganut, CEO of Hut 8, who is former, CEO of USBTC, which was like Asher's kind of been at the center of like the M&A story in the US.
Asher was always at Hut 8.
Oh, for
Zach.
Okay. This is why I'm not on the mining pod as regularly. This is why I come in to give my somewhat directionally right.
We take the colorful commentary.
Yeah. This is why I'm the color commentary. Yeah. But like, there's been a lot of M&A, and I know Asher's, every time it seems like Asher's name is part of it. So you got to hand it to them for just merging and acquiring. So here we go.
I mean, if Hut 8 can pull off these data centers, and if American Bitcoin excels, this split will be, looked back as like one of the most successful decisions that one of these companies has ever made. But it remains to be seen. I definitely do have questions about how much appetite there are for pure play miners at this point. But I think the biggest takeaway from this, and we'll get more into this in a second after this next story with one about IREN, but there's just been a lot of news about Bitcoin miners who are pivoting to AI and HPC over the last few weeks that are very consequential, and a lot of these business plans are coming to fruition. With the TeraWulf Google deal with Fluid Stack was really a shot across the bow moment, I think, for a lot of these miners. It's like, like you got Google taking a stake in your company and backstopping your tenant. That's kind of up the ante for what investors might expect from these Bitcoin miners working with AI and HPC. So I think all eyes are on Hut 8 for something like that too. It seems like their stock has been moving in such a way where it seems like they've signed a tenant. We don't know what the caliber of that tenant is, but I wouldn't be surprised to see an announcement in a few weeks. We will jump to a coverage of a report from CoinShares. And Matt, I'll let you take this one away. What happened in the market for crypto and Bitcoin ETPs last week?
Yeah, notable fund flows story. The largest outflow from global ET exchange traded products since March, as far as a week goes, 1.4 billion out. Yeah, I mean, so what happened here? I guess like there was a bad jobs report, right, and then there was bad PPI number. Inflation report. So everyone kind of thought that the Fed was going to keep interest rates where it was, or maybe even potentially hike interest rates. A little bit of fear about that. But then that really hurt risk on markets, particularly crypto. A lot of people divested. Bitcoin has kind of become an interest rate sensitive asset, at least on like short term time frames, not really, super long term, but nonetheless. And we had Jackson Hole last week, which is kind of the Super Bowl of central banks. All these central bankers get together. They talk about guidance. Everyone gets very excited about what Jerome Powell is going to say. People tune in very closely. So we actually had a lot of reversal because Powell came out and he said, it's all about unemployment, right? We care less about inflation now, and kind of signaled maybe we need to change our tune, was a bit of the forward guidance that our lovely Fed chair Jerome Powell put out there. And so markets quickly reversed. We had interest rate expectations, right, are back. They're 75% plus as far as a rate cut expectation coming next month. And so that's good for risk on assets, right? It's good for things like crypto. And so a bit of a reversal there, but in a nutshell, honestly, so kind of zoom out a little bit, not on a weekly scale, if we're looking about what's happening on crypto exchange traded products, kind of the first time ever that ETH is like a bit more of a preference in the limelight on any sort of extended time. Like in the last month, the inflows into ETH ETPs have been pretty wild. Yeah, month to date, ETH was a positive 2.5 billion in versus Bitcoin's 1 billion out. That is a stark contrast, especially given, right, the market cap sizing differences of the two assets. You wouldn't necessarily weight $1 in, $1 out equally between the two assets, right? Because one's so much bigger than the other. ETH has kind of caught the narrative. It's a bit of the darling. You have, a tremendous amount of the corporate treasury flows coming in. There's growing appetite. I was looking at 13F filings, which is like, if you manage over $100 million, you have to report to the SEC what securities you hold. And it's backwards facing. So we just got data about the end of Q2, even though we're like a month away from the end of Q3. And it was very positive on both fronts. So like investment advisors who typically are, they're managing capital for clients as a financial advisor, they tend to be a bit more conservative, longer time horizon than say like a hedge fund who's, more often to kind of make a trade. Their exposure is growing, and not just in dollar terms, but in Bitcoin terms, right? So they're adding to their positions, which is very positive. And the same goes for ETH, but like plus from Q1 to Q2. So I would say that the story for ETFs is like the approval from the US and the SEC. There's still a long way to go. These products are like 80% retail owned, non-13F filers. So like the majority of retail participation is very, very high still. A lot of the big national accounts platforms that wealth management channels are still approving, doing due diligence on these products, allowing people to get exposure. And if they do, there's like, oh, you need a certain amount of assets, or you can only have this threshold of a percentage of your portfolio allocated to these things. So there's all these different guardrails. I think that the foundation that's being put in place in the US for professional capital allocators to get into Bitcoin and broadly crypto space, that story will kind of play out more 3-4 years down the line, in my opinion. Next cycle things, I think it'll be even more important. Right now, it's kind of the pioneers, risk takers in their field. That was probably more of an explanation than you wanted, Colin, but I couldn't shut up.
That was a good rip.
That was
Charlie,
a good rip.
You wanted to jump in.
Oh, you got to hand it to Tom Lee, who is able to, capture the Ethereum treasury company zeitgeist and pump Bitmine immersion technologies, which sounds like a company we should talk about on the mining pod, but it's a treasury company now. So
yeah, we have. I think we had a cry corner a while back where it was like all your Bitcoin miners are becoming AI or becoming ETH treasury companies because BitDigital did the same. But it's paid off over this time frame at least. ETH has been lagging Bitcoin this entire bull run, and of course all of the maximalists were having their day with it and just dancing on the price charts of all of the ETH holders. But as I have here from Google, ETH is up 50% over Bitcoin over the last 6 months. It's pretty incredible. Year to date, it's up 12%. And then over the last year, it's down actually 4%. So pick your time frame. But even so, the rally that ETH has had recently has been pretty incredible.
We are CleanSpark, America's Bitcoin miner, a publicly traded company with the largest operating hash rate, powered entirely by self-operated infrastructure across 4 states. This is our proof of work, and we are setting the standard for what's next. Learn more about the intersection of energy and Bitcoin at CleanSpark.com.
All right, we're going to move on to the next story, which involves IREN. And per usual, it is an AI HPC story. becoming more and more common on the mining pod. IREN has doubled its GPU fleet to 8,500 units and has also secured $102 million in financing to pay back prior units that it has purchased. So now IREN has 8,500 NVIDIA GPUs after it has purchased 4,200 recently. And some of these are Blackwell B200s and B300s. And IREN has, like I said, raised some money to pay back one of the next installment for a prior deployment of GPUs, and they're looking for financing for this next one because these are quite expensive. This 4,200 Blackwell purchase cost them $193 million. But interestingly, IREN, unlike other Bitcoin miners like Hut 8, Core Scientific, all of these other ones, they're not doing the PowerShell model, right? They're not like just building massive facilities and trying to find a tenant to park GPUs there. They are actually going to rent out the compute themselves and operate it in their own facilities. And they recently just joined, I believe, NVIDIA's marketplace to be able to market this compute. Charlie, can you pull that up on NVIDIA's website, please? Yeah, so this is on NVIDIA's website on their marketplace. It says that the IREN is a cloud partner preferred for compute. So as I understand it, this means that IREN will be able to sell its compute or rent it out on NVIDIA's marketplace for companies that want to rent it and utilize it. The market has generally seemed to like IREN's strategy or think that they're executing well. The stock price has been absolutely ripping. I think that maybe this is partially people pricing in the marketplace news because that means that they will be able to easily liquidate this compute, but they're up 43% over the last month and 188% over the last 6 months from the April lows after the Liberation Day fallout. This is one of the stories that's kind of interesting to juxtapose it with Hut 8. It's just going back to that difference between the PowerShell versus the NeoCloud model. We're starting to see separation in the market in terms of strategies with these Bitcoin miners. And we don't know where the chips are going to fall yet because there's no other data, right, that we can look to in terms of these kinds of business strategy pivots. So I'm very interested to keep an eye on IREN and see how this develops because I always thought that it would be easier just to do the PowerShell thing, but it seems like they're doing pretty well with this as it stands. Y'all have anything to add?
Are there going to be any pure play miners left by the end of the year? You got to wonder.
Yeah. It is a big question. And like with CleanSpark now, they might look at it now that Zach's out. They mentioned that in some public statements. So we'll see.
It's like maybe that's the thing that holds us back to 1 zettahash. It's the wind in our face, which is the profitability of AI HPC deals.
I think part of the second order effect of that is higher hash rate concentration in the biggest public miners that are kind of just sticking to their old strategies and doubling down over and over again, or just that if their AI strategy is a very small portion of what they're trying to do. But yeah, this story, Colin, I think you highlighted the main points. It's interesting that they're running a different type of strategy. They are buying and operating the GPUs themselves rather than just leasing space and power.
Which seems like an additional headache for a Bitcoin mining company that is outside of the realm of what they usually do. Because I think, and maybe this is why the stock is ripping right now, assuming people are reacting to NVIDIA. I would imagine that one of the hardest nuts to crack for a Bitcoin miner, if you're going to an AI strategy like IREN's, is actually finding a way to have sales pipelines for that compute. Miners don't sell things; they buy things, and then they run those things. Right? They're not typically salesmen. And, when you actually have to make sure that you have an end buyer for what you're deploying, I would imagine that would be a pretty big operational hurdle and one that I thought might be, a little bit difficult. But clearly IREN has solved that problem, it seems, at least with the NVIDIA news. Go ahead, Matt.
Maybe you guys could dig into how this NVIDIA marketplace works in the coming weeks, because I'd be interested to see, what time duration do you sell your compute into on the other side? What does this kind of order book actually look like? How are they set up?
That would be a good show. I'm going to earmark that. We should absolutely do that because that's always been my biggest question. And I've brought it up a few times on the show. But with Bitcoin mining, everything converges around hash price. And there's a little bit of wiggle room on the margins if you're going to do like CK pool or Ocean pool, or if you're going to do a pool with another payout method that doesn't necessarily do FPPS. But it's more or less like you can generally know what you're going to be able to monetize a hash for, right? And with GPUs and with AI and HPC, the granularity in that, right, in terms of what gets priced what, has to be insane. You know what I mean? Like in terms of like what you're actually using it for, what are the caliber of the machines, how long are you going to use? Like there's so many variables that are impacting that. And I would love to see a dashboard somewhere that does its best to like track this in terms of like what is like a rough real-time spot pricing of X amount of hours for this GPU at X energy cost. So anyway, let's move on to our last story. Charlie, can you actually get the tweet up, please? And will you tell us what's going on with Ocean Pool?
So this is kind of a cry-corn, but it's not really. So it's just, some social chatter about development in the most talked about small pool there is, Ocean. And Ocean dropped a tweet this morning. Overnight, a huge miner switch to Ocean was triggered a bug and it associated fail-safes. No work was lost. Those stats have been impacted and payouts may be temporarily delayed pending a full analysis later today. So basically what happened is sometime overnight, again, this is like Thursday early morning, Ocean's dashboard flashed that it was estimating 300 exahash or so of hash rate pointed to itself. This was, as the official account says, it's just kind of downstream of an interesting edge case so Ocean apparently had a large miner join the pool. And that kind of throws weird things with their hash rate monitoring, their shares monitoring, and therefore the front end. So some of the plebs got really confused. And this might be a nice little opportunity to talk about, as we have a few times before. I assume we talk about it on the mining pod all the time. Like when we talk about network hash rate, we're really just talking about an estimation. For the Bitcoin network, you're talking about a relationship between how often blocks come in and their difficulty. So this also kind of applies to pools, where how does a pool measure itself? Like it doesn't necessarily measure its size by how many blocks it finds, but rather by like type of shares submitted to that pool. So pools will look at valid shares submitted by miners, which are shares of work above a certain difficulty. And it's kind of an interesting similar estimation because a pool can't necessarily know exactly how much hash rate is pointed to it. So there's this kind of secondary measuring mechanism, which again is an estimation. So when you have giant frequencies and shifts and variations in this, it can sometimes throw off some software. I assume this would happen to Ocean. Congrats. It looks like they added maybe 4 to 5 exahash more, perhaps. So they are growing. I remember them launching at like 500 petahash, and now they're at 15 exahash. They're still a de minimis part of the overall network hash rate, but this kind of like it made its rounds on social media, and I for one love talking about stuff regarding pools that doesn't have to do with filters. So this is a fun little idiosyncrasy of the business of operating a pool. And you got the Ocean dashboard here, which is
so they've got 13 exahashes currently, and that was a good breakdown, Charlie, about the pool not knowing how much hash rate it's absorbing. Estimates here during, I guess this is the spike, got up to 15.8, depending on how long and how much hash rate was actually pointed at it. Who knows? I mean, it certainly wasn't 300, but
it wasn't. But flash 300, and they fixed the UI now.
But it could have been a sizable chunk of hash rate. I don't know how many exahashes you need to move the needle, because I don't know how long it was on there and how this time frame, how it's averaged out. But kind of a weird thing. Like, what was that about? Even was that just was that a miner like messing up and just accidentally connecting? Like, was that a kind of someone trying to f with Ocean Pool a little bit? I don't know.
I'm imagining this is probably another one of their large like data center partnerships, one of these like sweetheart deals. Point your hash at us, we'll give you a good deal on fees or something, and look at our profitability. But then like when the shares, I imagine it's probably like when the shares submitted are like valid shares submitted by the miner spike, because that would, another 5 exahash would bump the pool up by 50%. Like that probably throws off whatever software there is. Like I imagine
they didn't scale into it. Like when you're deploying a lot of hash rate to a pool, you have to kind of do it in chunks, right?
It's really interesting how miners and pools actually work together and how it's evolved over time. I mean, initially, right, there was no actual mining pools. Miners used like JSON, RPC, like types of communication. Like they used what was built within Bitcoin Core already. Then there was like the Get Work protocol that came out, the early pools. Then you have Stratum, of course. There's been an ongoing project for Stratum v2 over time. But the different types of ways that miners communicate with pools, the different payout mechanisms, how they're proving that they're doing work over time. You guys said it already, but they're called shares. Typically, pools set like a much lower threshold difficulty, and you send like kind of lower proofs of work. They're called shares to kind of show that you are contributing. And then the way that these protocols were designed are all sorts of interesting stuff where you can like use different fields in a Bitcoin block to like try to get extra work, right? I think they call it extra nonce maybe. Charlie made. I kind of need to brush up on some
field
stuff.
If you can add the extra nonce field onto that nonce field. Yeah.
So it's a really interesting history here. If you ever want to kind of work deeper in the mining space or pool world, I think it's an enriching thing to kind of know how it's evolved over time. And then if you want to just know like the drama of Bitcoin history and the community and stuff, you can go get into the overt and covert ASIC boost times. And
you don't even have to go in history. Just log on to Twitter and tweet an opinion about Bitcoin mining right now, and you'll just jump right in it.
Yeah, the drama is alive today.
Okay, so the thing with Ocean, though, is I'm a bit of a novice in this area. I haven't spent much time in recent, honestly, years on this. But do they use like, I remember like a datum protocol? Maybe
Yeah, so
something else, right?
Datum is basically, it's really similar to Stratum v2 in just like what it does. But you need to run a digital server between the mining farm and the pool, and it kind of allows more direct participation in template construction. Datum's not open source, but we kind of understand how it works conceptually. I imagine that this particular weird idiosyncrasy with this hash rate spike had something to do with an edge case in Datum, because there's probably a large miner coming online, running a Datum server, and something about like how Datum handles like shares submitted. This is my suspicion. Again, I would actually love to get a deep dive on what happened with one of the Ocean people, because this is an interesting, weird, obscure part of Bitcoin mining that not a lot of people follow.
This is the stuff for the true geeks. This is what we talk about.
Yeah, especially if you've
Thanks
stuck
for
around.
making it to the end of the podcast.
Yeah, especially if you stuck around this long. All right, we'll close it out there. Thanks for joining, y'all. If you're interested in stuff with IREN, we are doing a live stream later today. The show will go out on Friday, but you can check it out on our YouTube. It'll be up in the live section. And otherwise, we will see you next week with another Mining Pod and another Mining Pod News Roundup. Peace, y'all.